Welcome to the VUCA Insights podcast, where I bring you insights into the world of entrepreneurship, investing, and growth mindset. My guest today is Rondy Yunanda Yong, an entrepreneur, investor, and educator in both the private and public market spaces. He left the banking industry to start up a few businesses and invested in both public and private markets since 2017. We talked about the tenets of entrepreneurship, culture within business organizations, what has worked well and not so well in the investing space, how venture investing is about saying no more than saying yes, and finally about building investing community within Malaysia and South-East Asia in general. We also talked about risk-taking in the capital markets and how ecosystems underfund certain startups in Malaysia, which in our opinion discourages more entrepreneurs from solving hard problems. We ended with thoughts about the overhype in stories and valuation in a tightening credit period and his learnings that are applicable to those wanting to venture into this space. Enjoy my conversation with Rondy Yunanda Yong. Hello and welcome to episode 5 of the VUCA Insights podcast. Today, again, I always say all my guests are special. This one is a special guy because I consider him a friend. I consider him also someone that I learn a lot from in investing, in doing business. And there are times when we even share personal views on how we see perspectives of businesses being run. So today I have with me Rondy Yunanda. Did I pronounce it correctly?
Yunanda, bro.
Yunanda. Someone very big in the investing business space in Malaysia. And thank you for spending time with me, Rondy.
I'm not big. I'm still learning. Still growing. Okay. Still making a lot of mistakes. But yes, thanks, John. I'm happy to be here.
Great.
Nice office.
Simple, as they say when we start, it always starts with a simple base, right? Today we have installed for you something a little bit different. Usually Rondy and I, when we get on either hosting an analyst briefing or our previous podcasts, we talk more about the public equity space. But today we're going to focus a little bit more on the entrepreneurship side of things.
Yeah, I think that's an interesting space to talk about.
Yeah, sure. Especially from your very interesting background and leading towards where you are today. So for those of you who have not heard of Rondy's previous podcast before, let's start with getting to know Rondy a little bit more. How do you actually start in the capital markets actually?
How do I start in the capital market?
Yeah.
Okay, that's, I would say, a big portion of that is due to my father-in-law, my current father-in-law. So when I was dating my current wife, I got to know basically my father-in-law, and he was somebody who was a full-time investor, a successful full-time investor. And I draw comparison to him versus, say, my father back then, who was a white-collar corporate man. Yeah, he was very successful also, my father. He was basically the CEO of Asia Pac, of a multinational corporation, So he was very successful in his own right. But just from that notion in itself, I see the difference in the time spent, the luxury of time, I would say, And I would say across time, I see that, my father-in-law was very broad in his, I would say, understanding about the world. Yeah, not just from point of view of finance, but economics and the way businesses are run and all those things. So I think that was, I would say, the first thing that actually got me interested in the world of investing in the stock market.
And that time you were in uni, I guess, right?
Yeah, that time we were in college, we were in uni. Yeah. So yeah, that's how it all started,
I see. So your dad was more of giving you that corporate perspective and insight, and your that time your future father-in-law was giving more of a broader perspective. And would it be fair for me to say that gave you a contrast to compare that to what your peers were thinking when they wanted to graduate? Because we chat a lot about how corporate guys think, how people actually the other group that goes into entrepreneurship thing. And looking back, what were the things that you could see because of this added perspective versus what your friends couldn't see?
Well, I wouldn't so much compare to my friends, but I was actually more comparing it towards what I feel I would love to be. That's one. And at the same time, I think I was also trying to match it with my personal characteristics. So, I was somebody who is very restless. I cannot just be comfortable doing one thing over and over and over again, I want to just keep learning new things. I want to see new things all the time. So I think in that particular sense, investing in the stock market was a very interesting pathway for career for me. So even from then, when I was applying for a job, I already knew that I want a job of which I was going to be exposed in the capital market. Yeah.
And you ended up in CMB, and was it kind of like your first choice? Because I think at that point of time it was...
CMB was definitely my first choice. At that time, that was circa about 2009.
Right after the GFC, right?
Yeah,
right in the smack in GFC.
CMB was dubbed as the Goldman Sachs of Asia.
That's right.
They were doing I think corporate finance deals in Hong Kong on AIA or something like that, massive deals.
Yeah.
CMB was my first choice, and I was very, very blessed that I got an opportunity to be a management trainee, of which it was very tough to get in.
Yeah. And you started off at the Forex desk, if I'm not mistaken.
Yeah, so the management trainee basically allowed you to rotate in multiple divisions, and then it actually asks you to select a department of which you really want to be in. So my first choices was actually not Forex or treasury sales. My first choices was a lot more to do with capital market. My first choices was like the private equity arm of CMB, or even sell side or buy side, but that didn't go through because I think a lot of people thought that my biggest strength was my interpersonal skills, and they brought me towards, or they lean myself towards treasury sales sort of division.
I see.
Yeah, I thought that was also okay because I was able to learn a lot about, I would say, different asset classes. I was able to learn about selling skills and whatnot. So I ended up in that particular division for about, I think, a good 4 years or 5 years. Yeah. So what I used to do was basically selling to corporates, to fund managers, things such as Forex, things such as derivatives from your interest rate swaps to your CPO over-the-counter swaps, to cross-currency swaps and whatnot, And I think even during that time, we were also a product owner of what we used to call dual currency investments and so on and so forth. So yeah, it was a very interesting career progression. It was a good foundation, I would say, as well. And I think sometime around 2014 or 15, I can't really remember now, there was an opportunity because CMB by then took this division from RBS, Royal Bank of Scotland, and it was an equity investment division. And I've always loved the capital market, as I mentioned, right? I love the equities market. So that was an opportunity for me, and I applied to actually move to become a junior trader. And I moved into that particular new department, and that was the place where I would say we did things that was very out of ordinary of what the local fund managers would do, in a sense that what we had was a very interesting set of strategies that was probably executed in, say, a more developed capital market like Hong Kong and India and Singapore and all those things, where you not only just go long, you can also go short. So you do things like an index arbitrage. It's strategies what we call by risk arbitrage, in the sense that you try and look for opportunities of which there are a lot more lower risk than just buying go one side of long or go short.
And I remember you were chatting. We were chatting and we talked about your book, in a way, that you had at one time to trade Indian positions, right? Was close to $1 billion, if I'm not mistaken, right?
Yeah, I think about 500 million US dollars.
Yeah.
For the group, for the
And
division.
you had somewhat of a free hand in a mandate in whatever instruments you trade, or was it specific to certain instruments only?
Freehand. Well, it has to be within the strategy, I would say. Yeah.
Okay.
So my boss, my colleague, the senior trader then, we would go on things such as index arbitrage in Taiwan, index arbitrage in Korea, single stock arbitrage in India, where you buy the short. Sorry, you buy the stock and you short the futures when you see that there's an arbitrage gap, And we would dabble in things like special situation trades. Special situation trades in basically things like M&A arbitrage and all those
Or a
things.
buyout, in a way.
Or buyout or spin-off,
Yeah.
or even IPOs. We apply for a lot of IPOs. So those are, I would say, interesting training lah, I would say. And it's very, very different than what we do in Malaysia or in Indonesia. Over here, a lot of times it's just long only. It takes a different set of analysis. It takes a different set of emotions, emotional journey, to dabble in different strategies in the equities market.
Yeah.
But you need to understand that, there are different types of strategies that actually impacts the prices of a certain stock. Yeah. So I think, just to take into context, if let's say, assuming like last time I was going to do like an index arbitrage off of KLCI, I needed to perhaps purchase a bunch of KLCI constituent stocks and short the KLCI futures. So if let's say one is to look into the KLCI constituents, sometimes they would be wondering, why is there a sudden fund flow into this particular stock? So they wouldn't actually know that. But from my point of view, I was executing a strategy. I wasn't executing based on fundamentals. So that's I would say a very interesting understanding about the capital market, more than just based on fundamentals.
Bottoms up. Okay, good.
Yeah.
Why do you think that obviously these kind of instruments are not readily available for the retail market, and obviously you come from a space where in general we may call it high finance, but even then in developed markets like in the US, they are very basic instruments of options to short stocks, and in Malaysia we only see things like IDSS, right? Why do you think we have not developed to a space where even retailers are offered short instruments?
Actually, there is a single stock futures, for certain stocks in Malaysia.
Correct. It's not broad-based.
Zero, there is no volume at all.
Yeah.
I was actually surprised to also find that there is a single stock futures. Yeah. It's available.
Yeah.
There's just nobody really, I suppose, create an awareness out of it, or nobody takes a serious interest out of it, So right now in Malaysia, the only short positions that you can do, as you mentioned, is like IDSS or an RSS,
Yes.
and that has to go through like SBL,
Yes.
securities buying and lending.
Yes.
Or you can just basically short the KLCI futures lah. Again, on why, I think it boils down to education. It boils down to information. Those are something of which the regulators and even the market participants in Malaysia have to I would say improve on lah.
Up their game lah.
Yes, correct.
Okay. So
So that was basically my short introduction of what I used to do. In a short span of my career,
which was about 8 years, right? Let me say 10 years.
Yeah, I think from 2009 to about 2017, about 8 years.
About 8 years. Yeah. Okay. So in that 8 years, what was the most boring part and what was the most exciting part of your career? What was the, in a way, a highlight that you don't mind reliving again, and what was the low part that you say, oh my God, I wouldn't want to do this again?
I think I was able to make my career in CIMB in the corporate space as interesting as it can be. The part that I hate the most, now that I'm on the other side of the coin, was basically when I was in CIMB. It was basically every March of the year. You basically need to wait for your bonus. And in order to get a good bonus, you need to rub shoulders with your bosses.
Appraisal time lah.
Appraisal time lah, basically. And once you saw what your bonus is, it's either you're feeling disappointed or you feel happy. I think those are moments out of which, I looking back at the moment, I value highly. But those are also moments out of which I suppose shape my personal future lah, I would say. On the other side of the coin, what I personally like about my time in CIMB, of course, I definitely learned a lot of things. I was fortunate enough to be given a lot of responsibilities, a lot of new things to learn about, So those, I would also take the corporatization of a lot of the way corporate works, the systemization of things.
Correct.
The process works, the process flows. I think those are good, I would say, foundation for one to be an entrepreneur, actually, I would say.
Very good that you touch on this point. Do you think, and I may be jumping the gun, but definitely we will come back to revisit this more, but you mentioned about the corporatization institution. The word I would say is the systemization of things, right? And you and I, we are both very aligned on systems. Why do you think that is important for an entrepreneur? Because, a lot of startups or a lot of partnerships, and when they start doing business, it's all over the place. People don't want to spend time operationalizing the business, for the lack of a better word. And how important do you think that is? I mean, having run businesses.
So, we can, of course, move into me running an SME business at the moment, So I personally think that corporatization of things, creating an operational flowchart processes is very important. Just from the notion of getting things in order, I think when you really want to run a successful business, you can't just for one moment you do a certain thing, another moment you do a certain thing, and there's no focus, and you're all over the place at all the time, So organization, I think, is a very underrated importance in the way people run businesses, in our opinion lah.
Okay. We dial it back a bit. We're definitely going to revisit this particular niche.
But sorry, to answer your question, it boils down to efficiency. It boils down to saving time, saving costs.
Yes.
Yeah, those are.
And also to grow. I would argue the other way is that not just saving and efficiency. I said that if you don't have systems in place, that's actually hindering any organization from growing. Actually.
Yes, for sure.
Yeah.
100% agree on that.
Yeah. So now you've passed that highlight of where you realize that bonuses are sometimes determined because of relationships, and there's a little bit more rigidity in a structure in a corporate world, right? And at that point, you were already investing, I presume, with the public markets in your own account, in your own personal account?
Yeah, of course, I can't really invest in my personal account.
Or because of your work
because
and
of
conflict,
my work, yes, correct. But I do keep a very close eyes in the public market space, of course. Yeah.
Okay, so having observed the market back then already, can you share how do you form your somewhat of an investing philosophy?
When it comes to investing philosophy, honestly speaking, it still evolves, and it still evolves right now, honestly speaking. I personally would like to define myself as a rational, generalist investor with preference on small, mid cap, and growth stocks, and as well as special situation play. I think that's probably best fit definition of who I am as an investor at the moment on the public market. Yeah, and to get into this point of time, it definitely boils down to my experience in CIMB, doing what I did. It boils down to the experience of which I have post CIMB, where I sort of like manage families' funds in the equity market as well. But yes, I personally am still trying to see what is my personal best fit.
Understand.
Yeah, because I'm still young, honestly, in the equities market.
Yeah. So it's like as you go along, you discover more things, you reflect, and then you have somewhat of a foundation of what you said, a generalist. So you're not going to go very deep into one particular niche or industry.
Yeah, I think being a generalist is important in a sense that you have a certain focus, like for instance, fundamental first, I think that's a focus.
Correct.
But you don't really want to be so much entrenched into a certain boxes of your definition of value, your definition of growth at all costs, at high PE and low PE, and you need to understand about micro factors as well, and your positions can change from time to time.
Yeah.
You know what I'm saying?
Yeah. Okay, good. Now jumping a little bit deeper is so both of us we chat a lot about business, public markets, private markets, you name it, even culture of organization. And I want to jump in a little bit more into how your investment philosophy is related to you running businesses, because you made this statement over and over in our chats, numerous chats, about how being a business owner or an entrepreneur actually helps you better understand investing. And so maybe you can start off with that. So why do you say so? And maybe examples of your own experience to that accord.
Right. So I think a lot of people know me from, say, my contents in Stockbit.
Yeah.
I think we have a couple of podcasts before.
Correct.
And that was very pointed to what I think about the public market in Malaysia, right? But I think another point of where I had grown into post my career is I actually started a small medium enterprise business in Malaysia, and this business basically is involved in the facilities management with focus in pest control and hygiene.
Okay.
Yeah. So it's called EcoCare, by the way. So you guys can, if you ever need to have any pest control services, you can give me a chat lah. You can just ring me.
Okay.
And I entered into this business because I feel that, I'm not sure if I can call it a paradox, but I feel that, if I run business, I can be a better investor. And I personally believe that in investing, you should always understand businesses first. Yeah. So that is why I actually dabble into this space. So now with my business, it is actually slowly growing. We started the business, me and my business partner, we started it, I would say, from 2018, but we were only seriously running it at about 2020, I would say.
Early 2020.
Yeah, because, early 2020.
Yeah.
So it would be about a couple of years right now.
2 years, huh?
Yeah, 2 to 3 years. Yeah. And I would say running business helps a lot in my personal investments. So let me just give you a case in point, right? Where, for instance, last year in 2022, I would say that one of my better picks, 2022 was a disaster year for me as
of everyone, not just you.
As a public market investor.
Yeah.
But one of my biggest winner last year was basically buying this stock in Malaysia called My News. Yeah, My News is a convenience store basically, right? And it was being sold off, I think, after quarter 2 result, where it recorded like very, very bad numbers. And it was sold off by everyone, by retailers and institutions. So EPF got out, And APF was, they were a big institution holder in my news. And
I think it was number 7, number 8 even.
Yeah, they were selling at all costs, So it actually pressured the price all the way down to about
30 cents.
30 to 40 cents, something along that line. And at that particular point of time, I have been eyeing my news for a while. But at that particular point of time, I thought, you know what? This doesn't make sense at all, because my personal business it has some certain characteristics that is similar to my news, in a sense that, I am also growing my SME business. We are trying to expand ourselves to other regions and all that. And we try to build density, because density actually matters on businesses such as this. And when we are in the growing stage, you don't really want to. It can't help but for you to have a lot of like gestation period, learning curves.
Yes.
You will make a lot of mistakes basically. So for instance, for my SME, right, when we try to open, say, a branch in Ipoh or in Penang, that will jeopardize a lot about our logistical understanding on what we think we can optimize. And when we open new office, there will be a lot more new expenses. So it is the same with my news, in my opinion. And I would say that me personally dabbling in also the private investment space, it helps as well, because when I was looking into my news by that time, I think it was trading at like distressed valuation, distressed market cap of below 300 million, But even during that particular quarter of which everybody was showing, they were still EBITDA positive. Now, I know that, when I was looking into the PE space, for instance, right, when I talk to private equity managers, they are looking into all these growth companies from a EV/EBITDA
negative
valuation perspective, for instance. And if I remember, if I was looking into EV/EBITDA perspective for my news then, my news was loss-making, but it was still EBITDA positive. Yeah, it was EBITDA positive, I think about 10 million then on that particular quarter, and 20 million on the next quarter. So if you annualize it, actually my news was still profitable at about like 80 million EBITDA per annum, And if you multiply that using a price to EBITDA of their historical means, right, you would have gotten something of around the range of 400 million or 500 million market capitalization.
So an upside of 100 over million.
So it was like at 300 million and below, it was a no-brainer investment for me, because you need to understand also, my news by that time, it already had a 1 year of learning curve, and now that they have got 1 year of learning curve, people are just throwing it away just because they're trying to expand regionally. Sorry, not regionally, but across the country, So it was a no-brainer investment then, and I put some of my money inside, and it helped with my overall performance, so that it was not double-digit negative like at the end of the year.
Good point that you brought up about, in a way I would say that this was a Sigabat turnaround opportunity, because their FPCs was loss-making. They needed to reach scale before they could be profitable. And that you brought in an angle of, comparison to a lot of private equity guys, because...
Yeah, private equity and my personal business experiences.
Yeah. Because
I would say if I did not have exposure to either me as an entrepreneur or an owner of an SME business, or for me dabbling in looking at some private equity funds and private equity investment opportunities, I would have never looked into my news in that angle, basically.
Okay.
If I was wearing my, say, public equity persona and all that, it would have been harder to understand.
Understood.
Yeah.
So in relation to that, let's take a step back and looking at probably the culture of learning. In the private space, you would build somewhat of an especially if you're a private investor and you're putting money at a very small size organization, probably 5 people to 10 people, maybe the max 30, right? You somehow develop an intimate relationship because you get to meet people at the founder level and all that, right? Yeah. And because of that, you get to understand the circle of people around him, the culture he's trying to build, versus that of, let's just say, a public equity space like my news, okay? And the question I'm leading towards too is this: there are certain insights that, yes, you may have as a private equity, as a business owner, right, in terms of culture. But how do you do that for something like a MyNews? Because there was some management change, right? The CEO that we met, Madam Low, was, switched out. Her roles were switched out and all that. And very much still a very family-run business, the Dang family. How would you be able to access something that you can see much easier in the private space, your own business, versus that of the public space? Because you're only seeing them at probably analyst briefings, AGMs, where they may only show a certain side of them.
So I think to answer that question, of course, you will not really understand other people's business as much as your own business. You obviously understand a lot more about your business. But I would say that what you have learned in your business, what are the strengths of your businesses, what are the things that you struggle into your own business, you can actually sort of understand a base gauge on other people's struggles and other people's strengths and weaknesses and all that. Case in point, for instance, right? Recently I was talking to a solar EPCC founder in Malaysia, right? So he was talking about how his business is comparatively better than other players in the space, and how his margin is higher than other players in the space. And he was giving us about a very, very long explanation on how it was done. So and we can actually really feel the passion, and we can really feel like this is somebody who actually really does his work.
Been in the trenches.
Yeah, been into the trenches. And it's something that I personally me and my business partner can relate, because we also face those struggles as well. And we strive to be as detailed as him, for instance. Like, we want to get as detailed as him. Like, I personally, when I was listening to those points, I was like, wow, I should actually come back and, talk to my business partner, and we should implement all these sort of like small things that when you combine it together, make a big difference in terms of
difference,
your costing.
Yeah,
right? So, for instance, this solar EPCC founder basically mentioned about, how his margin is better because, he understands everything from for instance, he takes into consideration the different types of roofs in residential units. He knows how many different types of roofs are there, how many different types of tiles on the roof in the Malaysian context. He said there are 6 different types of roofs, 6 different types of tiles and on the roof, and there is basically 3 out of which is like 80% of the Malaysian houses uses these 3 different types of roof tiles, right? And he basically come up with like an SLD, a single line diagrams on how to ensure this sort of like roof tiles are going to work with the solar panels. And he would talk about how he reduces his SKUs by basically by standardizing
the design,
the type of breakers, the type of cables, all those sort of things. It goes to that particular sort of detail, right? And he even goes into the sort of detail of how he tried to create an application for basically his customers to be able to do things like installation payments,
installment payments.
Installment payments.
Yeah.
How the customers will be able to look into like how the app is connected into the inverter's API. How the customers are able to pay directly from the app itself, right? A lot of things, a lot of the really, really small matters, out of which really can help on invoicing, on collection, on cash flows, and reduction of basically your overall cost. Yeah. So, and then he shared metrics such as how long it has to be for his contractors to install a certain like like solar roof for residentials and all that. But when I was listening to them, I'm like, okay, this is somebody who really dig deep and get his business to the most optimum level. Yeah.
I'm going to peel deeper into that. One, not so much, we've had many chats about the example you give, which is fantastic. And me being an engineer, the moment I listen to it, it's like ding, ding, ding music to the ears, right? But coming back to the benefit of the audience, right? One, if that is as an industry is somewhat unfamiliar to you, how do you gauge whether that's what he's selling to you is actually real or factual, or whether it's just like fluff? Obviously, you may not need to know the industry, but the passion that is exhibited by this guy is already one. So what else?
So I would say that, that's true. When I was just a purely public market investor or trader, you sometimes get fooled with these things in the sense that, wow, this guy is so passionate.
Adam Newman, case in point, right?
We talking about his business, talking about the technicalities of his business, out of which we have no freaking idea about. Right?
Yes.
But I suppose, when you then become an entrepreneur yourself, when you become a business manager by yourself, right, you get a better feel about what is right and what is wrong, what is real and what is not, So what are fluffs and what is not. So that is also, again, a segue to why I feel like being a businessman helps me to be a better investor.
Great. Second point I want to touch in relation to that is, you see, every time you have a service provider, be it like utility car, airlines car, whatever, right? The department that anybody hates to hate the most is customer complaints or customer service. Okay. Now, in relation to what you said about this EPCC contractor putting as much decreasing the bottlenecks of frictions as much as possible, right? And using an example of, let's say, EcoCare, what examples can you give has been a super duper customer complaint that turned out to be a positive one after you've implemented that change? And how does this help you shape? Because one thing I've just learned, Rondy, is that there's a few business entrepreneurs online that I follow, and this guy was it was for me, it was a light bulb. Is it? How do you know whether your customer is satisfied? It's not by the likes they're giving you, It's by the hate they're showing to you. Because if you find solutions to their hate comments or their practical hate comments, right, that's when you realize, I'm still not yet solving their problem, right? So in relation to that notion, in your case, or in maybe an example of other businesses, maybe EcoCare, what was a big customer complaint? It may not be to your company, but to other companies or your competitors that you are actually capitalizing on or taking advantage on, actually?
I think in answering that question, for me, I can probably just talk about it from a point of view that we are right now. I don't know whether it's luckily or not, but we are still small, So when we are still small, we are very much owner operated, and because we are owner operated, unlike our competitor for EcoCare, which is an MNC, and they hired of course professionals and executives. So I think where we have an edge is that the interaction with our customers are very real, in a sense that, look, we are an owner and we understand your problem, so we are talking to you as an owner, whilst perhaps a bigger company like our competitors, since they are an since they are an MNC, so when they come to your complaints, it might not be tended as I would say on an interpersonal level as we, as the owner who care about the business, attend it to be. But again, this is of course due to the fact that our size right now is small. Honestly, when our size grow, control will again be a problem. And I think this is where culture is very important, I would say. I think for my SME, me and my business partner, we believe that culture is very important. We want people to really care about our business as much as it is their personal business as well. So when we tend to customers, and we are in the service industry. So as we know, the service industry is very interpersonal. It's very personal level. So I think that touch have to be there, basically.
Great. So customer complaints, as you grow bigger, you will not be able to handle every single one. Your business partner may not be able to have a single one.
Exactly.
So there's two things. One is, you mentioned culture, but also another underlying one I want to peel deeper is alignment of incentives. Because for the MNC that you talked about, they are compensated or commensurated based on a salary, and perhaps better performance, then you get a bonus, right? But even then, there's what I would say an employee mentality creep that goes in. It's like, I'm just doing my job. I need my own sanity. 10 hours a day. That's it. That kind of thing. So where do you think is the right balance, you being an entrepreneur yourself, to incentivize it correctly without overpaying, but also at the same time to inculcate a culture that they care? Is it because of a top-down leadership approach, or is it purely you think it can be solved from an incentive structure perspective?
Honestly, I don't know yet because, again, I don't want to pretend to know because I'm still in a learning journey.
Correct.
But I think over time, we go into this journey together, me and my business partner. We understand what is our long-term goals and what we want our customers to perceive us to be, how much we want to grow, how far we want to go, right? And I can't say more than just the culture that we try to build. Hopefully, by trying to build a certain sort of culture, it sort of diminish the rigidity of a very, very big company. At the same time, we have that particular personal touch to our clients and also to all our employees, basically. But again, honestly, to answer your question right now, I have no idea yet.
Understand. Until you scale. Yeah, no, I'm just trying to tease out like what you have seen from your corporate experience.
Yeah. But I do see, that there are some public listed companies that we invest in, where there is a real, I would say, a very good delegation, a very good sort of people who are responsible in their own small segments of the business. Yeah, we have seen a lot of very good managers, even in Malaysia, right? We talk about your QLs, we talk about your Mega First and whatnot. So maybe we can learn from them, actually,
In relation to that, I just want to get your thoughts on business partnerships because I don't have... Obviously, the numbers vary from country to country, business to business. But most startups or businesses, once they reach a certain threshold, the likelihood of failure is partnership fallouts or scalability, just plateau. Even just recently, the guy I wanted to introduce you to, the furniture business one. So he told me his plateau. The business is plateau. It's not that they are the partners are enemies to each other. It's just that the scalability has just plateaued. They've been in business. So what do you look for in a partnership in terms of accountability? I think skill sets can be formed, but more in terms of values and accountability.
I think that's a good question. And I believe that the key to successful partnership is that you both of you have to have a very aligned long-term goals, and you need to respect each other's strengths and weaknesses. You need to understand, you need to admit that you have a certain strengths and weaknesses, and compatibility also is very important. Like for me and my business partner for EcoCare, we understand where we want to be in the future. Like we have a long-term goals about where the business should be at, and why we should be in this particular journey together, right? I would say, I want to touch on that point a little bit later on, but so we respect each other's strengths and weaknesses. For me, I think my business partner is a very, very good business manager. He has the capability of which that I do not have. For instance, he's able to talk to a whole entire range of people, for instance, like he's able to talk to all my staff, from the ladies bin drivers all the way to our customers who's a Tan Sri and who's a Datuk Sri. He has that range. I personally know, and I have told him many times, that I do not have that range. So that is very important. But the thing of which I find that I have got a strength in is that just from my personal experience in the public market and my corporate experience, I understand strategies, and I understand what it takes to be, what are the sort of like growth points that we need to go into, and what I see works in the public market companies and what doesn't work in the public market companies, and I sort of like implement strategies into the business in itself. And I think we also both need to be realistic about each other's expectations, right? So like, if let's say we expect ourselves to be here and to be here, whilst we understand that it's not possible, then we shouldn't do that. Like we should lay down the baby steps on how to grow into a certain place. And I think space is also very important. So in a sense that, now that he is predominantly running on the operation side, I need to give him space to excel. And at the same time, he needs to give me space in a sense that, like what are the financing capabilities and working capital that we can attain, and all these sort of things. I think these are very, very important communication. At the end of the day, it's just like you and your wife. It's like you need to communicate well. You need to communicate well to handle your babies, to handle your children. Like there will be a lot of conflicts, but you just have to talk it out at the end of the day. And try and align again your interests for the betterment of the children, for the betterment of the company.
Okay, you brought two examples, and maybe I want to dig deeper into that, right? A lot of the examples you've mentioned are still, I feel, very much on the communications skill set, strengths, weaknesses. But in terms of, let's just say, fairness, okay, and also the emotional well-being of the relationship, I would say. In a husband and wife relationship, the emotional well-being takes priority because one, you're already into a marriage, right, and all that. And I agree there are similarities between a marriage and a business partnership. But there's also in terms of the well-being of, let's just say, if one partner is asked for certain accountabilities and agreed upon, and yet does not deliver. So let's say in your case, you were lucky to have a partner that's a go-getter, communication skill sets. But in other partnerships, which both of us also know and evaluate, many different businesses, right? There are certain accountabilities that are being passed on to the partnership, but it's not being fulfilled. Then how do you think that will work out? Or do you think that it's best to just close the chapter and move?
Yeah, of course. Again, as I mentioned, for me, I'm very lucky to have good partners for EcoCare. And even, for say, Stockbit, I have got very good founders. And I've got a very good team in Malaysia as well. And I would say everybody have got a very different sort of like, just like marriage, Sometimes people get into a marriage after they know each other only for 1 month. People get into marriage when they only know each other for like a very short period of time.
It could be very long, but then after marriage only, then the
people change and all that. Of course, there will be some time out of which perhaps a divorce is the best outcome, the best option for everyone. I'm not denying that, right? So. But yes, for EcoCare, I think I'm very blessed to have a very good partner and have a very good team. And I think, again, just want to sort of like circle back to the reason of why we both believe that this is the journey that we should take. Is again, both of us came from, say, a corporate settings, right?
Correct.
When we started this business, it was just like, you give 50% of your time, I give 50% of my time.
Correct.
But at the end of the day, it doesn't work for the first 2 years. Because we hired somebody from outside, and it didn't work out. But when we decided, you know what, let's venture into this in a more serious manner, right? And we looked into like, okay, why are we doing this? And I think that is very, very important. For us, at the very least, we are doing this because we just want to upscale our transferable skills.
Yes.
I think that's very important. Because now I would say that what I'm going to explain next have got a lot to do about why I start to leave CIMB, leave the corporate world, and start into a new venture of either becoming a full-time investor / an entrepreneur of an SMEs and all that. And I think that this particular reason stems from the very fact that, we are corporate workers. We are in a rat race in Malaysia. Honestly, I have spoken many times to say a lot of my friends who
former
colleagues or friends who are working in Singapore or Australia or whatnot. Personally, everybody have got a different definitions of success. Everybody have got a different definition of how they want to live their life.
Correct.
But if let's say your success is monetary, for instance, or if let's say your success is to grow as much wealth as possible, I find that, or living life in its fullest or something like that. If let's say you are in Australia or let's say you are in Singapore, right? I think for you to continue in a rat race, for you to continue working for a good company that pays you well, it's fine.
Yeah.
Because the government looks after you. You've got a very high standard of living.
You got a good social welfare protection system in a way.
That's right. And also your currency have got very strong purchasing power.
Correct.
So you don't feel like, when there will be time of need, you are stuck with a currency out of which you feel like you are not able to purchase anything.
In a way, your tendency or your opportunity cost to take risks is not that high in a way.
Yeah. So I think this has come into a realization for me personally, that during a particular time when I was either being a salesperson in treasury or when I was trading in equities, I have been headhunted many times, right? So then they will be like asking, so Rondy, what's your salary at the moment? And then I'll be like, oh yeah, I'm now earning 7,000, 7,000. Now I'm earning like about 9,000. And then they're, oh, okay, so 7,000 US dollars, 7,000, 9,000 US dollars. But I'm like, no, it's actually ringgit.
Their benchmark is US dollars, right?
Yeah, and then I was realizing that, hey, you know what? There is actually somebody else like me in the other side of the world who's actually earning in US dollars. It's not that I'm dumber than them. It's not that I'm less skillful than them. I'm not less technical than them.
Yeah.
We are the same.
Yeah.
I can do exactly what they are doing.
Or even better sometimes.
Even better.
Yeah.
But then I am living in Malaysia and I'm earning in ringgit. So that is not a problem if you're okay with it. Again, as I want to highlight, different people have got different perspectives in life, have got different level of successes and the way they want to live their life. But for me, I think that was like a big question mark, and it has always been a struggle for me to stay relevant in the rat race in Malaysia. Or do I want to level up myself and try new things, for instance, to become an owner, a business owner, Because, again, if you're in Singapore and Australia, fine, by all means. You want to live over in that way of life, it's fine. But if you're in Malaysia, high luck, like one time your parents get sick or you get sick, you realize, hey, you know what? I actually cannot afford a lot of things. Medicals I cannot afford, houses I cannot afford. Even getting into a car, then your debt level is like it grows very fast. Vis-a-vis basically your salary. And even when I want to talk about like going into holidays or buying imported goods, you feel the pinch basically, long story short. So because of that particular notion, I feel like, you know what, it's good to be in a corporate who pays you well, but what about if, let's say, we try and sort of grow ourselves and try to be a business owner? Well, I mean, after all, we are still young. What sort of risk?
Build up a buffer lah. If you're worried about risk, I mean, corporate people, you guys get paid bonuses, whatever. Build up a buffer lah. Then what's the risk you're talking about?
Correct.
Yeah.
And this is where I think me and my business partner have got the same alignment. In that we believe, wealth is not just purely defined from the aspects of monetary value. I think wealth is also defined by your network wealth, who you know, and wealth is also defined by your transferable skills. Now, those two are very important source of wealth as well, because the people that you know can help you a lot in the future. And in terms of transferable skills, it is also very important. So for instance, if I've stayed on in, say, CIMB Treasury sales, doing buy and sell Forex, or buy and sell commodities, or buy and sell derivatives, and if my business partner stayed on in, say, where he used to work in IBM and all that.
Yeah, he was from the corporate world as well, right?
He was from the corporate world, yeah. Those transferable skills can easily be outdated in the fast-changing environment of the world today.
Completely agree.
Yeah. So now what happened is that if we moved into this particular comfort space of ours, we actually level up when it comes to our wealth in transferable skills and in our network. So for instance, right now, when we do our business, we start to understand, we start to mingle with
other business
Dato,
owners.
the Tan Sri that owns the business of which we try to get and close. We learn about organizational skills, about how to talk to people, about how we sell things, about how we ensure processes are in place, right? So these are perhaps not yet a monetary value today,
Yes.
but it will be very relevant in the long term.
Correct.
Yeah. So the fallout is this, right? If let's say our businesses fail, right? And if let's say our businesses fail, these are transferable skills that you can bring on to your next level of life. You know, like your next career path would even be enhanced. Your CV would enhance because you have these failures. A lot of people think that failures is a taboo, but in my opinion, failures are a big plus. Yeah.
You know, I'm chuckling or not, Rondy. Just recently, I came across an article exactly what you said. Microsoft, the Silicon Valley companies, the tech companies, they rather hire a startup tech failure rather than a Harvard grad. Because the skill sets that a startup tech failure guy has gone through, experience, accumulated knowledge, domain knowledge has gone through, will be much better than an MBA grad from Harvard.
Yes, 100% agree.
Yeah. So that's why I was chuckling, because in the past, I think our education system that has not changed has very much been designed for the industrial age. Yes, there are some niches of academia that has catered for more skills-based and all that. But I think the school of hard knocks and how fast-changing the economy is today, like, you know, we were having a discussion about content creators and, you know, why you invest in them, why you think there's value. Those are the things that it's, how do I put it? It's not quantifiable. It's not like you have a degree, you have a postgraduate diploma, that kind of thing. It's not yet framed in such a way there's a peer comparison or a benchmark. And what you just said is something like, unless you've done it, you've been in the trenches, then you know, okay, startup guys, there's certain skill sets, right? And those guys who come up from corporate and then go startup, some of them are transferable, they're up level. But some also will also struggle because they're so comfortable with being in the corporate space and they have unlimited use of resources, you know, at that point of time. So the question, perhaps now, rather than just a comment, the question for me is this. Do you think that because a lot of young graduates today, they come out, right? They see, oh crap, I'm going to earn like 2K, 3K. I mean, like as an engineer, right? We were talking about this, about, you know, how Singaporean analysts are being paid like insane amounts of money compared to the engineering grads. So here is a 23-year-old, 22-year-old, and they come up and said, no, I don't want to do the corporate path because it's going to be linear. What would you say to them? Because you having gone through the grind, similar to me, gone through the grind and then come out, versus them of, I want to jump up. Everyone wants to be a startup tech mogul. Everyone's So what would you say to them in a way?
Honestly, I believe there is no right answer for that.
Correct.
In a sense that, look, if let's say you really get a very, very good idea and you're very grounded in the way you were brought up, perhaps you're already ripe enough to be an entrepreneur at the age of 23, honestly speaking. And I have seen some of, I have even invested in some of the private companies where, you know, this is the guy's first business venture. He has never been grilled in the corporate setting, but, you know, he has got the ideas, he's got the skill sets, he's got the techniques, he's got the ability to manage everything. Then, yeah, sure, why not, right? But
But sorry to interrupt you, but there's a nuance also because he grew up in an entrepreneurial family and all that kind of thing, right?
Could be, yes.
Yeah. So I mean, I'm not saying like what you said. There's no right answer, but just trying to give the audience a perspective that don't use it as a generalized case study.
Yes. Yeah. But I would say that working in a corporate setting has got its perks lah. As we mentioned earlier, it really helps you to be hardworking, to learn about things from a perspective of being a pawn of the chess.
Yes. You have to be a pawn sometimes.
It's true. Like so it really builds you to it really hardens you up, I would say, for the grueling entrepreneur journey, I would say.
Okay.
So I personally is very interested also, right? Like for instance, like you, John, like you personally give up your high-paying job to enter into your sort of like passion and dream. So that's a harder thing to do when you are like at a certain age. Like I personally have got a lot of things to sacrifice, but I was still, by that time, 2007, I was still
30.
like 28, 29 years old. So I can still always fall back to my corporate life or whatever if things turn sour, right?
Yeah.
But I personally give kudos to you to be able to, and not a lot of people, I can tell you that, to be able to jump ship when they are earning as comfortable as you, honestly.
In hindsight, it may not have been a very smart move though, but I think thanks for your kind words. I mean, we've known each other quite well over the past 3 years, and I would say it's a kindred spirit kind of, just very, very, very aligned values and all that. But maybe let's turn that into a question.
Yeah. Did you leave because you saw what I saw? Like when it comes to running a rat race in Malaysia, in terms of creating wealth by other intangible means, not just monetary value. Like, is that what you saw last time?
That was one big one. But the other thing that I saw was actually, and I've shared this with a few guys before, and I don't know whether this one I've personally shared with you, was actually my dad's retirement. And my dad's retirement actually brought a lot of sense because there's something bigger than just money.
Yeah.
And I think, let me clean that. It's something bigger than just money. And why I say this is important is because, as you alluded earlier in the podcast, success is not just wealth defined. Wealth is a byproduct, right? And I borrowed this from Chia Cheng Hai, actually. He said this, fantastic. Wealth is a byproduct of professional excellence. Wow, it stuck to me like glue, And why am I answering it in this manner? Is because when I look at my dad's retirement, I don't see him working any less harder than any business owner I know. I tell you, he gives so much of his life into public service, into charitable work. He was in the teachers' union, unpaid, and he would work I would say easily 40% of his free time. No, 60% of his free time is actually given to the union. And in the past, I used to be very, upset. Because, here I have Form 5, all my friends are like Imperial College, King's College, and here I'm struggling to even get a place in uni even though I had good results, right? And that was this bitterness that got to me, and I realized it's very expensive to be poor. So obviously the wealth was a big driver, but also at the same time reflecting on what my dad gave in terms of public service. I realized that you have to come into a space of success where it doesn't just involve wealth. And I think that's where that sacrifice when I made, right? In hindsight, the only regret I have is that my family has to go through my entrepreneurial journey. They had to take certain lifestyle cuts that I would have been, I wouldn't even have to blink to give it to them, right? But then on the flip side, it's something that you and I both share in common of, you were sharing about how your startup with your wife actually just bungkus and, right? And I look at it and I'm saying that, but that's the learning curve. That's something that you will not be able to experience if you stayed in the rat race. You will not be able to stare at failure in the face, pick yourself up and go through that again. And, me, having gone through certain businesses, partnerships, and picking myself up and saying that, hey, is this worth it to continue? Is it not? I think that would be my answer to that, in a sense that success is not just purely defined by wealth.
Yeah.
wealth will come somehow or rather. Obviously, I complain to you about how poor I am at this point of time. Poor, but when you compare poor, right? You compare to other people. I'm actually very blessed. I think both of us are very blessed to be able to mix with the people we mix with. We have a certain lifestyle. Some may be varying degrees, but there are other people's not even having this kind of opportunity.
Yeah.
And I think turning back into a question for you, Rondy, why do you see people not willing to come out? I mean, you talk to your colleagues, colleagues that, they are probably some high ranking. They probably, you thought of it, if you stayed back in your job, you could be at that position today, having that kind of pay, maybe a VP, maybe a GM, or even why do you think people don't do that actually?
Well, honestly, again, it all falls down to everybody is different at the end of the day, and everybody have got different upbringing. Everybody have got a different level of comfort. Everybody have got different goals. So I think ultimately it just boils down to that. It's just for me personally, I suppose just due to the characteristics of myself, being restless all the time, I just don't like to be dictated by somebody else, by a corporate or by a HR. Like it's just something that I don't enjoy basically. Honestly speaking, in CIMB, I learned a lot, especially in my last department. I was still going to learn a lot more, but I thought, I think it was really time for me to move out, because the longer I stayed, and this is where I give much credit to you, is the longer I stayed, the harder it is to actually leave out.
Agree.
Yeah, because the more you are in the comfort zone.
Correct.
Yeah.
Correct. So now I'm going to segue into still in relation to entrepreneurship and investing, is your foray into private markets. And you've said it yourself, there are a lot more times you say no than you say yes. Let's probably start with the yeses first. And one of the yeses that I today admire is actually your foray into Stockbit. Maybe chronologize that journey, and how do you even had a seat at the table? Was it Series C, I think?
No, it was like
Series D or
seed
E?
I would say.
Seed. Okay. So probably chronologize that journey for us.
Yeah, so I think I would say sometime in 2017, I sort of had my mind made up to actually leave the corporate setting. And then I was thinking on what should I dabble with next, right? So, of course, there has been a lot of ideas that I have in mind, all written in a book. What are the sort of things that I want to do? Either open a sports bar, open a cafe, all these really silly ideas like that. But at the same time, I had this interest in a sense that I want to build a community, like a stock market community. I think that's very interesting. And somehow, by luck or by chance, I got across Stockbit when I was applying for an Indonesian IPO, when I was in CIMB equities desk. And I thought this was an interesting concept. So by that time, I actually just, I just mailed Wilson and Sigit, and then we chit-chat. And
they were based in Jakarta.
They were based in Jakarta. And long story short, I really like what they were doing. We had the very similar idea about what we were trying to achieve. And I think, this would probably come in later on, but that the understanding on what they are trying to achieve, the understanding of a simple idea, because investing in a startup, investing in a private equity space, it could as simple as just be agreeing into an idea. Yeah. So that was honestly what happens for me in Stockbit.
Okay.
I was looking into a company of which I think I want to dabble in after my career. I came across a very similar company that was aligned with my idea in Stockbit.
Okay.
I talked to the founders. I see how they were interacting. I see that they are good people. I see that, they can make it happen. I believe they can make it happen.
Okay.
I see the big picture. I see all the optionalities, all the ecosystem that they can tackle. And say, yes. I had a leap of faith and said, yes, I want to invest in you.
That time,
by that time, as I mentioned previously last time, as a public market investor, I understand what it means by valuation. I understand what it means by fundamentals,
You
right?
took the words out of my mouth. Yes, go ahead.
And by that time, Stockbit honestly didn't have anything in 2017.
Yeah.
Like all they had was, I think, 30,000 users.
Yeah.
And that's about it.
Yeah,
an
and this
idea.
is mainly Indonesian based, right?
Yeah.
Indonesian users. Okay.
And so I honestly took a leap of faith. And so that was a big slice of luck for me. I'm not going to even hide it. I'm not going to pretend that I was a very shrewd angel investor. All I saw was an idea. All I saw was three founders that just clicks.
Yeah.
Three founders that works well together. And I thought the idea was something that is needed in Indonesia, and I just went with it. Yeah.
And I think the bonus for you was that the space they were in was very much in what you were very interested in, which is
Yes.
equity space, community
That
building.
is correct. So that is
Yeah.
something that I had in mind to build as well.
Yeah,
You
yeah.
know, so that is why I went into them, and thank God, it has grown leaps and bounds
Yeah.
to where it is today, lah. And I wouldn't say the same to, or rather, I shouldn't say that, but I wouldn't say that a lot of my other startup investments, because I do try and be an angel investor to a few other startup companies of which I have invested. Some are still in the test of time. The juries is not out yet.
Yeah.
They're still grinding.
Yeah.
But I do see some of them are starting to fail. Yeah. So of course, for me, I have a very big slice of luck with Stockbit that I can afford a couple of failures. But yeah, so some of those that fails, they have got their own challenges, lah.
Yeah.
Be it just the wrong time, wrong place, wrong time, or they have got a great product, but somehow they were not able to come up with a business unit economics out of it, or they are like they are top heavy in a sense that they have got too many founders. In hindsight, I knew about it, but I just
You
looked
suppress
past
your
it.
gut. You suppress your gut, like, in a way.
Because the idea was nice and sexy, The other one could be potentially that, they have got a very good idea, good business prospects, but they are not able to execute. So there are different nuances of which a startup can actually fail or succeed, basically.
Yeah. No, interesting point that you brought up, because the variables at that early stage, and even as a public company, right, as they go through different cycles, different management change, there's also many variables. But that is what makes investing interesting. Okay. So this is one of your yes. Any other examples of yeses? That means money that you're putting in, and you see that it is actually on a growth trajectory, and you may not need to be specific, but I want to tease out from you what the traits that you think are going in their favor.
I think Stockbit is definitely one of the prime example for me personally. I do have one or two others of which have managed to to raise a new series. Yeah. So I think coming from this sort of experiences, I think that it is important for the founders to want to hire people who are smarter than them. I think that's very important. Secondly, I like to have founders who hire people that is very different from them also. I think that's important as well. Other than that, it all falls again to great execution. I think this one I personally have learned over time is that you would want to have a startup investments that actually can be in the conversation of important capital allocators in the venture space. What I mean by that is that what I see is as successful investments in the startup world is that they are able to be in the conversation, or they are able to create a flywheel effect. So you need to understand, and this is something that I personally learned not too long ago actually, that the startup ecosystem, the venture ecosystem, right, the private market ecosystem is actually again, coming back to that particular wealth that we talk about, the network wealth that creates a flywheel effect. So what I mean by that is that an investment that is started as seed, it will go to the next round if, let's say, there is a further investor and a further investment going around, basically, right? So you need to have a company that is able to be in the conversation of, say, your Sequoia, your Naspers, your 500 startups, your AC Ventures, your East Ventures, when they are actually having a gathering or something like that. And they will be bouncing ideas on, what is the good startups that is going around next, So I think this is very important as well, in a sense that can this startup be rotating in the flywheel effect? Yeah, so that helps to build the next rounds of valuations. So yeah, I think that is something that I think is important as well.
Okay, so...
And I would say that is something that I learned to probably be one of, right now, is a struggle in the Malaysian venture ecosystem.
Good.
Yeah.
Good. Great. What are the no's? Prior to the pod and in our previous conversations as well, there are a lot of more times. Actually, an investor's job is to say no more times than the yeses. So maybe give, rather than company names, give examples of what were the criterias that just had a cross, and because of that, you said no most of the time. Many industries, right? Because there's like, some were in the FMCG, some were in the consumer product space, some were even in recycled oil.
I think we both went to some of this pitching. But unfortunately, or rather fortunately for me also, I have very limited capital of which to deploy, in this particular alternate investments. So I would have to say no a lot more than yes. But yes, there are a lot of very obvious no's, in a sense that, just scalability, in a sense of what is the addressable market. Scalability is the same thing, sorry. And founders who just basically tries too hard, basically, those are some obvious no's. And again, as I mentioned, the flywheel effect, because for sure, maybe I get into this investment on this particular company now, but you'll be burning a lot of cash, and maybe you can raise from seed to Series A to Series B, but is there going to be a taker in Series C and Series D and all those things, right? I think in Malaysia, honestly, there is still a lack of capital allocators within that particular space, that links between the Series A and B to the Series, say, D and E. So those are some of my no's lah.
Okay.
Which are a lot.
Yeah. Okay, now you've already mentioned capital markets and...
Sorry, and maybe other than that, I also want to just highlight on even... These are basically selective startup investments.
Yes.
But I want to also highlight, funds, in a sense like VC funds or private equity funds and those and the likes of that. In the past, honestly speaking, I have been a very big skeptic of venture capital funds. I have never invested in venture capital funds. That's why I go angel by myself last time. It's because I find, or rather I used to find, venture capital funds and venture capitalists, they have this like frat boy feels, honestly speaking. Like they will go gung-ho into an investment without understanding about the businesses, about the valuations, and they will go all in, without really thinking long and hard.
The due
diligence,
yes.
They just say, okay, because, I'm just gonna, it's a shotgun approach, I just need one
out of 9 or 10.
One out of 100, I would say. 1 out of 50 that makes it, then I'll be settled, So I always thought that that was not cool, and it was not in the same alignment of my principles, even when I tried to dabble in the private investment space. But I would say that last year I actually invest in a venture capital fund, and I would say it is down to the fact that valuations have rationalized, and there are some certain VC partners that understood, the learning processes as interest rate goes up, as the macroeconomics change. And honestly speaking, I still love the ideas of investing early in the tech space of, say, in the Southeast Asian region, for instance, because as you all know, the digital economy in this particular region is still booming, right?
Yeah,
So
yes.
I do want to invest in VCs that is able to adapt, I would say. And one of them did, and I liked it. I like the fact that they are trying to invest in companies out of which are tech-based, but they will tackle problems, and they are able to create businesses that will generate real economics that will match eventually to the valuation that they are trying to target those companies at. So yeah, that's where I want to put it lah.
Great. So not just companies, but also funds or founders of VCs who actually understand, so funny you mentioned this. So I had the opportunity, a blessed opportunity to talk to Matt Van Leeuwen, who is the CEO of Sunway Innovation Labs. And he brought up this very interesting example of every startup incubator that it pitches the idea to them, everyone just wants to build an app. What's the app for? I don't know, but they just want to build an app. So he said that publicly, which is a very good example to the point of what you just said, because it's sexy to be a successful startup. But if you come from that approach that you want to be a successful startup rather than coming from a real world problem, real economics value kind of point of view, I think it goes like, so he segued to a great example, which is agriculture. And if you don't mind me sharing, Rondy, there was a Invest Malaysia 2018. I remember it very, very vividly because I prior to the 2019, prior to the pandemic. And one of the guys on stage at that point of time was actually the Banyan Tree founder. Banyan Tree Hotels and all that. He's Singaporean. And at that point of time, if you remember, 2018, 2019 was when the Pakatan government first came into power. And Mahathir set about saying that they want to go back to cars, revitalize the Proton strategy and all that kind of. And this guy was quite bold. He actually said, "No, that's ridiculous." He said he looked at Thailand, and he said that Thailand never built a national car, but they're big in the car industry. I mean, you go to Rayong, you know exactly, the Toyotas of this world, right? But said, why are we not focusing? When he said we means Malaysia, why are we not focusing on the strengths that we already had? Yes, we want to move out of agriculture because it doesn't look sexy. We want to go into tech, we want to go into the digital economy and all that. But I said, what are the spaces within the strengths that we have as a nation that we can monetize on? And he said, he gave an example, he tried to go into the sago business, And he said, sago, you talk about nutrients, content, everything is great, but government policies, there's no right incentives, there's no taxation scheme. Malaysia has its strengths, the pioneer tax status and all that. But agriculture, you actually don't see this kind of revolutionary policies, So the point I'm trying to make is that there's a real world problem in which I've been sharing with you my thoughts about food security and all that kind of thing. And yet here we're not solving that. And actually when you solve that, there's actually money to be made. It's just that people see it as unsexy, it's not a tech, it's not an app. So here I go about segue into your NOSA. And
actually, that's very true, John. I would say a lot of people always look down on Malaysia.
Yes.
But actually, Malaysia have got plenty of things to offer.
Correct.
Yes, we may not be the best in softwares, but we have got very strong hardware engineers.
Yes.
In Penang, as we all know it.
Precision metal.
Yeah. And we have got ample of renewable energy, be it in Sabah, Sarawak, and all those. And agriculture, right? Honestly, now, yes, I think it is very, very interesting that you brought up the fact that a lot of founders these days just feel like a startup is, the definition of a startup is tech, and they need to create an app.
Correct.
So I think now that the current macro environment is the way it is, in a sense that the interest rate has gone up, and the so-called tech might not be being looked at the spotlight of being cool and sexy anymore. Perhaps the definition of venture is just that, in the sense that it's a mix between startups and an SME. You know, it can even it's a venture, right? At the end of the day, it's a private venture. Yes, one might be not yet profitable. One might already be profitable in a very short span of time. But a private investment in a venture can be categorized as just a pure venture. It doesn't have to be a tech startup.
Yeah.
So hopefully, you know, I honestly wish for Malaysian upcoming entrepreneurs to look into the 0 to 1, what Peter Thiel mentioned as 0 to 1 companies that can be garnered from the strength of Malaysia. Because at the current juncture, a lot of, I would say a lot of unicorns, even in Malaysia and Indonesia and Vietnam, honestly, they're not 0 to 1.
Yeah.
A lot of them are localization of unicorns in more developed nations.
Correct.
You know, so if let's say there will be people who's looking into what are the strengths of Malaysia, what is it that we can do better than other places, you know, utilize or garner, use that particular strength. I don't know what it is, honestly speaking, and create a 0 to 1 idea. I believe there will be a lot of backers.
Yeah, the struggle is this, Rondy, and I'm definitely gonna segue to questions for you, because we talked about the capital underwriting of capital markets, debts, and all that. Is that there's so many frictions to an ideation coming to fruition. What I mean by this, I was a 13-year-old and I was actually helping out at a science exhibition. Okay, I'll share with you the idea. This guy, he just wanted to solve a problem. His father was a carpenter, and they will keep banging his fingers because he was, you know, when you hold a nail, I don't know if you do DIY work at home, if you hold a nail and you have to like that, right? Yeah. So he actually came out of a plier. The idea was just a plier, a very specialized plier to hold different sizes of nails, so that when you hit the nail, it will hold it in place and you wouldn't bang yourself lah. So 13 years old, probably you're talking about 1993, 92, 93.
Yep.
But I don't see it coming to commercialization. You see, there are a lot of if you follow, I mean, both of us follow the ATE space. Some of these robots that you see being, you know, serving in the restaurants today, like your kayu nasi kanda and all that, these are Malaysian inventions, you know, right? They don't build overseas; they're built in Malaysia, and yet we see funding difficulties, VC guys not willing to take the bet. It actually discourages a lot of these entrepreneurs to think from first principles, because they know that if they're going to solve this problem, you start thinking about the capex, you start thinking about, think about James Dyson when he wanted to start his, right? It's like a long journey being played out, right? What do you think can change that will help these guys either get better funding, better mentorship, or being in the space yourself?
That's a
loaded question.
Loaded question. And honestly, I think people who are in the industry of either a PE guy or VC guy probably can answer better than you. But from my personal point of view, being very limited in this space and looking into Malaysia, I would say that, when it comes to capital, it all actually entails an ecosystem. When we come into an ecosystem, it is derived, I would say, by, of course, one is a human capital, the people that actually have got the ideas, the entrepreneurship. It also comes from network capital, in a sense that these guys needs to bounce off a bunch of network, the flywheel effect I mentioned.
Correct.
And of course, the financial capital.
Yes.
Now, the financial capital in itself in Malaysia, I would have to say, is still lacking.
Yeah.
And I believe that stems from the nature of Malaysia as a country when it comes to risk assessment. I think I saw in one of the Penjana talks or report, right? If I'm not mistaken, right now, when it comes to equity capital market in Malaysia, the total capitalization, I think, is about 1 trillion ringgit or 1 point something trillion ringgit.
Yeah.
And out of that 1 point something trillion ringgit, the amount that is invested in ventures, in private investments, be it VC or private equity, is like a portion of roughly about like 15 billion only.
Yeah.
So that's basically 1.5% of your equity capital market. And if you take that into comparison to your debt capital market, I think it's twice the size or even more than twice the size.
Yeah.
So that basically tells you that in Malaysia in itself is generally a more risk-averse country when it comes to financial capital. So that's one that has to be taken into consideration and has to be tackled not just by one person. It has to be an ecosystem from the top of the government and the Ministry of Finance, to everybody basically, right? And the network capital is also the same thing. Even in the public market now, we are seeing that foreign investments into Malaysia is at an all-time low or at a decade's low or something like that. So that doesn't bode well as well when it comes to network capital. You do want to have your sequoias, you want to have your Naspers to be inside this particular country. So how do you garnish that particular interest from them? And the human capital, again, as you mentioned, that was the problem in the sense that, you do have people with talents here. It's just that they would feel like they're not being appreciated.
Correct.
So it's a gigantic work I would say that has to be done by everybody in the country to make Malaysia as a very compelling hub. But it's not to say that there is no potential here. There is plenty of potentials here. I personally am invested more and more in Malaysia because I see the value in this country, right? In the public market space. There are a lot of great builders here. There's a lot of great entrepreneurs who are able to run businesses very well. And as a matter of fact, like a lot of entrepreneurs who are succeeding in, say, other countries, they are basically Malaysians. So there's definitely a lot of opportunities, I would say.
You mentioned about Malaysians successful outside. I told you about Cadence, remember? The EDA software.
Yes,
right.
Cadence.
Cadence. The CEO is actually Malaysian. Tan Lip Bu, obviously he's now American, but you see all these talents that we have here are like being exported. It's like, kind of think of it, we're not as big as India as an exporter of talent to the US, but I think generally Malaysians fly below the radar. And just to give you an example, so I was in Holland, right, when I was still in Shell, and this Nigerian lady, a very very talented colleague of mine, ex-colleague, and she said, "John, how many languages do you speak?" Not a lot.
Language is
exactly.
Language is our and the diversity of Malaysians is actually an asset, right?
Yeah, exactly. So I said I speak 3. He said, "Do you know how many people?" So she did a Google. She said, "Do you know how many people speak 3 languages?" International. I mean, Nigerians, they speak a lot of language because different dialects and all that kind of thing. But as a business of a language of lingua franca, Chinese, Mandarin, English, and BM. Okay, within this region, but language is there. And turning into a question, you as an Indonesian versus a Malaysia, what are the pros and cons do you see that either both Malaysia or Indonesia have to offer the world versus that of a more developed country? I mean, Europe, there are certain thoughts, we can go about that later, but I see Indonesia and Malaysia having so many similarities, a lot of talent. I really admire the Gojek Nadim, right? His name Nadim, right? What do you see similarities of what Indonesians and Malaysians have to offer in general in terms of the startup business space?
When it comes to startup business space, I think not only just Malaysia and Indonesia, I would even consider Southeast Asia as a region in a sense. I think Southeast Asia as a region is still a laggard space. And they have got the benefit of looking at hindsight, I would say. You can, I mean, a lot of the companies and a lot of the startup space here can look into their precedents from, I don't know, Europe, China, India, and US, and see what has gone right and what has gone wrong from them, what they need to do in the current context of macroeconomics and stuff like that. So I think And I would say Southeast Asia in general have got a very young population. It's again, I mean, this has been brandished everywhere, but everybody knows that Southeast Asia has like 600 million people.
Yeah.
And out of which, I think the average age, if I'm not mistaken, is about 29 years old. And so this is still a young population, and this is a digital first economy right now.
Correct.
So there is definitely plenty of opportunities. And just now you mentioned about Goto, and of course Goto's valuation had been bashed down from 30 billion US dollars or something to now about, I don't know, 12, 13 billion or something like that. But yes, they're still burning money, but the fact that you cannot hide is that they're still growing on the top level.
Oh yeah, exactly.
Yeah, so there's still plenty of growth. It's just about, I would say, rational investing. It's about how to really garner the best out of what the ecosystem is providing lah. And again, it's not just a one-man work. In Indonesia, I think when it comes to the financial capital side of things, they are a little bit better. And probably they are also blessed because they have got a stable politics for the past couple of years.
Correct.
And people are starting to have confidence back into the country.
That's right.
And they have got players like, for instance, an East Ventures and all that, who's able to put some money down to invest in a lot of the upcoming and great tech startups, to kickstart. And when foreign investments are looking into Indonesia, they know who to basically try and buddy with lah, basically, because accesses to information, accesses to deals is also very important. That's where the network capital comes in.
Exactly.
So but honestly speaking, there is still plenty of untapped potentials. We are just touching on the tech sector, and I believe the Indonesian tech sector is a little bit hyped.
Yeah.
We haven't even touched on the SMEs.
Correct.
Because the SMEs in both countries, be it Malaysia or Indonesia, I find is very, very interesting, and there are plenty of opportunities in the SME space because this, again, as I mentioned, and this comes to my personal conversation with my business partner in a sense that, guy, hey, bro, look, we are 35 years old.
Yeah.
Honestly, if you really think about it, we are the sweet spot.
Yeah.
Because we are just right after the baby boomers.
Yes.
And we are basically just above the Gen Zs and
the
whatever
millennials.
the millennials. We have got a feel of what it was like to be real, without gadgets.
Yes.
But at the same time, we have got on top of us a bunch of baby boomers, of which they are not able to pass on their businesses that they have built with their sweat and heart,
Yeah.
because their children are just not there.
Yeah. Yeah.
Right. So then, these baby boomers actually have got their financial literacy is not really that high.
Yeah.
Yeah. So what you can actually look into is basically a bunch of SMEs that is being well run, profitable, that you perhaps can buy at very decent valuations.
And modernize it, pivot it to suit the younger generation.
Yes, utilize them.
Yes.
The younger generation. So we actually sandwiched in two very interesting generations.
Because we've grown in that perspective, and yet we are in touch with the younger perspective. I mean, there was this TikTok video that was so funny. It came out. I just saw it yesterday, Rondy. I don't know whether you've seen it. The girl was given a normal phone and she couldn't use it. So it's like a swipe at the Gen Zs. But at the same time, we epitomize with their pain, but also we epitomize with the, for the lack of a better word, the old wealth, how wealth was being built and all that kind of thing.
Correct.
Yeah.
And that's not just in Malaysia; it's also in Indonesia.
Everywhere. Yeah.
So I think for me personally, if let's say you are really in touch with the real economy stuff,
yes.
In both countries, you actually can see plenty of opportunities. I don't mind even sharing, right? In 2020 to 2022, because of Stockbit, we have got the privilege of interviewing a lot of public listed companies.
Correct.
Getting them online for some retail briefings and all that. There has been instances that after the retail briefings, there are some SME owners who came and get in touch with myself personally and said, can you introduce me to the public listed companies? Maybe I want them to buy us out or something like that.
Correct.
And then a deal could or eventually happen.
Correct.
So there are definitely some gaps to be filled over there.
Yes.
And again, it comes back into the network capital.
Completely agree with you. Actually, it's a very good segue into the next question I'm about to ask, which is equity, education, and community building. So it took you time, it took you some kind of exposure, for the lack of a better word, to get, I was just having a chat with Terence and Ashwin on Sunday, too bad you couldn't join us. Ended up being 3 hours. But I'll quote something that Terence said. So Terence, if you're listening, it's you, okay, I'm talking about. It's about him being a 29-year-old, having the opportunity to actually talk to C-level, right? Which is something that a lot of millennials or Gen Zs may not have the opportunity, because you're not qualified to have a seat at the table, right? So here comes my question. In terms of equity, education, community building, a lot of people want the fruits of the labor, meaning to be able to meet the CEO and all that, but don't understand, and I hope disagree or agree with me or what I said. A lot of them have not built value to have a seat at the table. What I mean by having a seat at the table is that, have you actually done the homework to understand, to gain that kind of respect back from the owners who want you to be at the table? And how do you think, first, whether you agree with or disagree with me? Second is whether equity education is something that is the responsibility of the community, and who is not playing enough of that role. In a way, because right now it's like people like Stopbit, people like me creating content, but there are other players, the financial institutions, the brokers, which, I'm definitely going to ruffle feathers when I say this. I don't think they're doing enough. Right. And to see whether you agree with me or not.
Yeah, I think I totally agree with that.
Yeah.
At the end of the day, investment community is very important. Financial understanding and financial knowledge is also very important. To answer your question, it could even be, and I honestly have no insights on this because it has been a while since I was in university, but it could even be as simple as creating like Finance 101 as a compulsory subject, in the education system. I'm not sure whether they have it now.
No, they do. Even in primary school, my daughter is being taught about compound interest, but
good.
But the struggle is this: that's the theory side of it, and there's a disconnect because it is being taught as an academia versus that of, can you imagine, right? So here, today we are blessed. You can actually attend an MIT MBA class on YouTube, right? But who's teaching? There's one course, I think I've told you about this. You heard of Gary Gensler? Gary Gensler is the current SEC chair. Okay, it's virtually like Versa chairman, SC chairman, right?
Okay, yeah.
He was teaching a class on blockchain on MIT, in MIT. It's provided for YouTube, right? In Malaysia, do you see Tan Sri Zeti going to UM to teach? You see the point that I'm trying to get at?
Yeah.
You don't get to see Larry Summers. You get to see Larry Summers going to Harvard to teach, right?
Yes.
But do you see like Mr. Goh Nan Kyo going to help university to give like a public lecture on how to run entrepreneurships? And I feel personally, I come from, my parents are all educators. I see there's this lack of coordination or effort to match all this, because you can teach them compounding interest in school or even in university, or you can teach very complicated finance concept. But how do you apply it in the real world requires a practitioner to come in to teach.
Yeah.
You see where I'm coming? You don't need to, and I see that very lacking. I don't know whether in Indonesia it's the same. I know you may not be in that space.
I have no idea, but I believe, those should be garnered. Those should be encouraged, right? Because yes, it really helps, the younger generations to understand more about finance, to understand more about the players in the space. Just as simple as maybe some games about venture capitalists and all those things. I think those are very important. Honestly, right now for Stockbit, we are really trying to level up the knowledge of the investment community. I think honestly there are a couple of players in Malaysia who really is I would say champions in this, and we are like, I mean, in my personal opinion, we are unsung heroes lah. Like, for instance, like yourself, MJ, and like Max from Want to Invest, you know, like
Sawi, Savi.
So these are like unsung heroes, because honestly speaking, we are trying our best to educate the retailers about finance and financial market and everything to do with finance. But at the end of the day, we are not going to get any awards from Bursa. We're not going to.
Actually, we get more roadblocks actually from Bursa.
We might even get roadblocks from Bursa, from SC.
Yeah.
But you know, whatever that we are trying to do, honestly, it's really out of passion, out of interest. So it's a very hard question again to answer and how to solve. But yes, I feel that perhaps the regulators and even everybody have to play a part lah.
Yeah.
And the educators as well.
Yeah, I mean, going back to what you said about, you know, the startup ecosystem and risk underwriting, it takes a whole village to be able to create an ecosystem. I think similarly to equity investment literacy is the same thing.
Now, honestly, that's the thing. It takes the whole village to raise a kid.
So final few questions, because obviously we can go on and on, Rondy, but you know, let's try to sum it up in the last three questions that I have here. One is the startup VC community building in Southeast Asia. You did touch about it earlier about, you know, the three things: network capital, financial capital, and what was the last one?
Human capital.
Human capital, right? Having enough people to want to be entrepreneurs, to want to attack ideas from first principles, right? What do you think, in our personal capacity, rather than the regulators and all that we can actually encourage this to happen? And it doesn't need to be some big policy or whatever. In your personal capacity.
Yeah, I think coming out to this podcast, for you to create all these podcasts, it's already a start lah, you know. Hopefully it has many reach, but you know, I think it's, at least we're trying to do something, basically.
Correct.
It's just,
rather than lamenting and complaining, right?
I'm just saying, like, you know, I have a friend who basically whatever that she's trying to do to save the planet from plastic free and all that, she herself is not going to change anything, but at least she's doing her part lah.
Yeah. Okay. Second thing, it's about in terms of drawing the line of profitability and sharing. Okay, I know it's a loaded question, and maybe I said some nuance about it. In recent times, we have seen either public listed companies or even startup founders overpaying themselves, overvaluating themselves. Okay, think of the likes of, I was just, last night, I was telling you I was watching Charles Ghosn, Goshen. He was the CEO of Renault and also CEO of Nissan, right? And he had to escape from Japan over to Lebanon because he was escaping prosecution. But the crux of the matter was they felt he was overpaying himself. Okay. Now we go to the startup world, we see people like the Theranos of this world, the Adam Newmans of WeWork. Where do you draw the line in terms of sharing that profitability, in the sense that how much do you think that startups are overpaying themselves too early? And where do you draw the fine line? Because they have to be able to reap that rewards as a capitalist, right? But I know there's no perfect answer, but in your personal opinion, where do you draw the line at, wow, this is a bit excessive, this is too little, you know, you need to be rewarding yourself a little bit more, you know. Not easy, I know.
Think, I probably want to look into SoftBank on this.
Okay.
Just trying to take an example out of SoftBank.
Yeah.
I think what SoftBank have done, honestly, is a couple of things, right? Number one, perhaps they just have too much capital. Yeah. Perhaps they just, you know, they are also struggling. When they raise funds, they are able to get a lot of funds, And maybe sometimes, too much money is not a good thing as well, because it really skews your judgment. It really skews your emotion when it comes to deploying the particular capital. And that creates, maybe you went into companies like WeWork, for instance, right? In a sense that you raise Series A, and the Series B, you raise it again. And then you raise again the Series C, right? So, I mean, you're the only person that actually up your own game.
Correct.
And then now you're basically feeding this particular person with so much money. And maybe he thinks too highly of himself, more than what he's supposed to deserve at a specific time of period, So, again, it's not entirely the fault of Masayoshi Son, but at the same time, perhaps he is an animal or he had to do what he did because of the fact of what the ecosystem gave him.
Yes.
I think
cheap credit as well. It doesn't help.
Yeah. So, do you want to blame it on the macro side of things? Also, perhaps there is. You could actually say that as well. That is why I think it's very, very for me. As you mentioned just now, to say no to a company it takes some strength.
Yes.
Especially good companies, right?
Yes.
But it also, as a capital allocator, I think it takes very real strength to say no to people who wants to dump money into you.
Correct.
So let me just give you an example. So for instance, maybe like an East Ventures in Indonesia, or if I'm not mistaken, even Creador, right? I think they can actually raise a lot more than what they are trying to raise, but they put a hard line on what they want to raise, because they can easily say, I want it all, but they said no, because we know that this is the maximum that we can allocate and deploy our capital. I think that takes real strength to do, and real realization on what are the size of the economy of which you can deploy your capital.
Okay.
I think that's very important as well.
Great.
Yeah.
Okay.
I'm not sure if I'm answering your question. But
No, you are in a way, because I think you answer it from a very good angle, because it's not just the compensation that matters, it's actually the valuation of whatever capital being raised, because on paper, it's not money coming straight into the founder's pocket, but money being given to grow the business can get just overly wild.
Yeah.
And on paper, this guy thinks net worth is this much. And when it's actually built on a lot of air, okay, it may be good, a lot of hype. It may be a good business, but it's being built on so much hype and air and every kind of thing. And that's where it gets to their head. That's exactly where I was trying to angle it, because I was, in relation to the question I asked you, I was just reading an article with A16Z. And I don't know if you know the fiasco of where Mark Andreessen actually texted Elon Musk and said that your Twitter deal, I'm putting in 400 million with no due diligence. So now imagine you are an investor in A16Z, right? You give them so much capital that they like, oh, by the way, their fees a year is 500 million. Just on the fees alone. They're just busy collecting fees because of the size of the fund. So it actually goes into a feeding frenzy, because in a sense that I've got so much money, and yet the amount of work to deploy that money is a lot. And here they are seeing money being deployed recklessly, because it's like 400 million, no duty, I just pump everything to you, And it's like, it shines a light that sometimes excessive amount of money and excessive valuation actually is one of the determining factors to feed all this overpaying, overvaluation, and that risk-taking, you see. Yeah. Last question. If you were to look back at your journey from corporate side, taking the risk into entrepreneurship, starting a business, being a public market investor, what would be one or the two most valuable lessons that until today stuck so much to your head that you try to evangelize, or to try to tell other people, and using this platform to share with younger generation, or even the older guys who are like still stuck in their comfort zone?
Right.
Yeah.
Can you just repeat the question one
Okay,
more time?
so
that let me. I think I'm getting the right answer.
So you've moved from corporate white collar guy to now a full-time investor, full-time entrepreneur, what were the life lessons that you've picked up that you would know could be a pivoting moment for the guys who are still stuck at the crossroads? That means they are like either earning a comfortable corporate career, a salary, or they're a startup entrepreneur that is going through a very bad patch and yet, they're about to give up. Maybe a lesson learned that you've learned from your years being, venturing out on your own.
Yeah, I mean, honestly, I can answer that by just saying take a leap of faith, but I think that's very dangerous.
Oh, yeah.
I think everything has to be calculated, honestly. Perhaps what I would say is look into everybody inner self first. Like, what is it that make you happy? I think that's a very important question to ask first, and if it is something... if let's say you're happy living a very simple life and the way you are living your life in, say, a rat race or a corporate setting, you don't really have very big, you don't really have the wants and the needs of
the desire
of a lot of things. Hey, by all means, that's very, very cool. Honestly speaking, I think just stay where, I mean, that is very good. Yeah. But if let's say you do feel that, where you are at the moment, you feel like a bit bleh, or you feel like a little bit bored about where things are because things are so stagnant. You feel like you are not really, the hands of your future is not really on yourself, Perhaps then you can try and look into alternatives, try and do things out of your comfort zone, perhaps. Try and upskill yourself by, again, as you mentioned, look into things from online, because there's plenty of things that you can upskill yourself with.
Yes.
Find a new hobby. And I think it is also very, very important, be it an entrepreneur or an investor, to not be shy about your failures.
Yes.
I personally think, one of my strengths, or rather one of the things that I like to love about myself, is basically like, showcasing to people my whole of shame. I've got a lot of life failures, and so for instance, even when we talk about Tesla, for instance, right, just now, I mean, a lot of people know that I am a big believer in Tesla. So I think I did well for the funds that I manage, because I actually sell Tesla along the way when it keeps going up. Just for context, I actually in February or March 2020, when Tesla was at 100 billion, I called Tesla to be at least 200 I called Tesla to be 200 billion by the end of 2022. But by the end of 2022, it was 350 billion, but it had fallen from 1.2 trillion. You see, so that's the context. But so one of my whole of shame, if I can call that as well, is that, whilst I sell Tesla on the way up for the active managed portfolio, for my personal investment in Tesla, I've been holding it. I've been holding the bag. I didn't even sell when it was high. I didn't sell when it was like 1.2 trillion. Even when during that time in March 2020, I said by 2030 Tesla would be at 1 trillion. Right? So do I feel stupid? Yeah, of course I feel stupid. But again, it's one of those things that I want to, those are learning curves, in my opinion. And there has been a lot of failures as well. There has been a lot of very bad investments, very bad trades. So don't be shy to admit your failures
and make those mistakes. I mean, a lot of people are afraid of making those mistakes, actually.
Yeah, and I think just be nice to people as well. Be humble, be nice to people, because you never know who you might make friends with. Stay true to. I think this is something probably that is important nowadays, especially in 2022, where I feel like the world has just lost a lot of love. I think just be lovely to people, just be nice. If let's say you are in a community, don't try to. I mean, when you disagree with something, try and give constructive feedback in a way that is not so hateful. For instance,
Correct.
I think these are big takeaways that I have personally built over time. And I suppose this has helped me to create the network capital, which is still growing, by the way. It has helped me to build or rather to know people that have the potential to be a human capital as well, be it in the public market space or in the private market space. And it has allowed me to know people in the financial capital side of things, where I know these are important capital allocators in the future, for instance.
That's right. That's
right. And at the same time, we move into wealth. Then by doing all this, I think you over time should be able to generate network wealth. You should be able to generate a transferable skill wealth, and eventually, hopefully, monetary wealth as well.
Okay. Rondy, thank you again so much for your time.
Yep. Always a pleasure.
Yeah.
We always talk very long.
Yeah. Until Mamak's actually close and chase us out, right?
I think we need to timestamp this, otherwise you'll never find where everything is.
Yeah. Hopefully there's an auto-generate transcript on YouTube now, but it's okay. I would say 90% accurate. But for those listening in, I hope you've enjoyed conversations like this. Do subscribe, share this content, give it a like, hit the notification bell. This is definitely not going to be. This is going to be the first, and definitely not going to be the last, because I was at a conference yesterday, Rondy. It was something organized by a financial institution, and I met two interesting individuals, and we came to the same conclusion that people don't want to read, don't want to grow. People think they're growing, but they're not growing. So the space is very small, and because the space is small, you'll be expecting to see people like Rondy and the same likes in my podcast and in my in my content creation, because this community is built on what I call mutual respect. Mutual respect for each other's, like what Rondy said, be nice and be kind. So do spread this content around, and hopefully see you in the next video. Thanks you so much. Yeah, thanks. Bye.